Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, it's a new month. Happy new month to you guys. Happy February, and trust you guys are doing very very well out there. So, as usual, before we kickstart the session, let's run through our daily routine just to quickly confirm that we are all on the same page. Good morning. If you can see my screen and you can hear my voice loud and clear without distortion, please let me know in the comment section by typing in hi. This will give me a positive feedback that we are good to go this morning. And thank you very much for your feedbacks. All right, I can see a couple of comments here from Das Schupa. Good morning to you. Thank you very much. Soj123. Good morning. 88697. Thank you very much. Happy new month to you too. Hello, Carrie. Happy new month. Bena44. Soj123. Miambak1. Thank you. Okay, Ikari no Tenashi. I hope I just pronounced that name correctly. Thank you very much for your feedback. So on this note, I welcome you all to yet another promising edition on the X-Trend Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as I will be taking you on a trading journey where we shall be evaluating the financial market and looking at things from a technical standpoint using our basic tools such as trend lines, key levels, and of course chart patterns to unravel the potential trajectory of price action today. Well, today is the first trading day of the month, and of course it always comes with its own peculiarities as we're likely going to be seeing some new injections into the market as a result of participants trying to digest what has happened throughout the course of last month, especially yesterday when we had the FOMC press conference, and of course the interest rate decision from the United States. And of course today market participants will try to digest how this data, of course this information, will be affecting the market and how they will be positioning themselves for the next move. But as technical traders, we all understand that this behavioral patterns usually reflect on the chart as price action. So we will be delving into the charts today to see how we can strategically position ourselves for the next move. So I encourage you all to grab your favorite beverage, stay tuned in so you don't miss out on any of the insight we will be sharing on today. For those of you who are joining us for the first time, you're highly welcome on board, and I'm very very excited to have you around with us this morning. Well, as technical traders, let me giving you a quick brief of what we do here. We gather here every day, come together as a community, and engage in follow-ups and reviews of our current trading positions in preparation of the New York session. This session officially kickstarts 10 a.m. UTC, 11 a.m. West African time, and I recommend that you stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. And please note that my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Remember, the more time you spend with us, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you and encourage you to actively engage in the comment section. So with that being said, let's dive right into the business. And as usual, the first thing we normally do is to keep tabs with the fundamental factors that will be affecting the market sentiment today. Now, these fundamental factors often manifest on the chart in technical patterns and price movements. By monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and of course timing to position ourselves in such a way that we can capitalize on any potential move prior, during, or even after this economic event. Well, so far this week, and based on the asset we have been monitoring since the beginning of the week, we have been focusing on economic features from both the United States and the Japanese economic docket. Well, the Japanese do not have any high impactful events, so we've been considering the mid-tier economic features from that particular economy. But besides that, the US economic docket is laced with a bunch of economic features that everyone in the market will be looking forward to for this week. And so far this week, we've had very interesting situations, from the unemployment rate from the Japanese economy to the housing price index, JOLTS job opening, and consumer confidence from the United States. And of course, yesterday was one of the most important days for the week, where we did experience the ADP employment change, which came in below expectation at 107,000, giving us a negative deviation of 1.01. Then we had the Fed interest rate decision, which of course was left unchanged, which was not coming to us as a surprise at all, as this was what majority in the market were looking forward to. Then we had the monetary policy statement and of course the FOMC press conference, where the Fed chairman did have a speech yesterday. And though I'm yet to get a full highlight into what the speech is all about, but I was able to get some key important notes that we can hold on to guide our trading decisions going forward. And one of the things the Fed chairman said yesterday was knocking out the idea of an interest rate cut by the month of March. Remember, last year it was there was this expectations of a rate cut as early as the month of March due to the receding inflation rate in the US economy. But based on the data churning out from the United States in the last couple of weeks, it really shows that the inflation rate is still high. And in fact, using his own word, he said the inflation rate is very high, and because of this, there is no chance of any rate cut. And it went on to further insinuate the potential of a possible rate hike going forward. So what does this mean for us in this community? Well, this information he has given us is more or less an hawkish statement, an hawkish remark, which supports and probably could give some positive traction in favor of the US dollar. Of course, if there's a possible rate hike, definitely market participants will want to move their capitals into the US dollar just to be able to enjoy the high yield in return on that particular asset due to a higher interest rate. So we are going to be looking at how the market had reacted to this event during the last 12 hours or so, and see how we can potentially capitalize on the next move. So you don't want to miss out on that one. Then today we have a bunch of high impactful events for today, but I will take on the most important one, which will affect our decision making today. And one of the major ones we're looking out for today is the ISM manufacturing PMI, a key economic indicator that measures the performance of the manufacturing sector in the United States. This data here is coming in about in about 4 to 5 hours from now, so we should keep that in our calendar as and stay tuned for that one. And one thing about this event is that it has a range which this sector is measured between 0 to 100, and a reading above 50 indicates expansion and can positively impact market sentiment, reflecting a healthy and growing manufacturing sector, while anything below 50 is considered as a contraction in that sector. Now, if we look at the previous data for the ISM manufacturing PMI, you will see that it came in at 47.4 for the month of December, and economists, based on what is on ground now, are projecting 47 for the month of January. Now, this is more or less closer to what happened the previous month, sorry, and though it's still below the 50, which shows that the that sector is not really doing up to par. So we look forward to see what the actual data will be on this one. Will it be just as expected, below expectations, or even beyond expectations? Then another event that we are going to be looking forward to today is the OPEC Plus meeting. I did mention this at the beginning of the week, especially for those who are trading the US oil. And this OPEC Plus meeting is likely going to be affecting the market sentiment as we head into the new month. And there is likely going to be some more production cuts. That is what has been speculated so far in the market. So we look forward to see what the outcome of that meeting will be to gauge what our decisions will be. So these are the impactful event we're looking forward to today. And remember that tomorrow also has another major one, that is the non-farm payroll, which is coming up tomorrow. And we all know that the anticipation of major events like this usually influence the market sentiment, which of course will reflect on the chart as price action. So with this information, let's scale into the chart and see if we can identify potential patterns or structures we can use to strategically position ourselves for the next move. So going into the chart now, the first asset, I'm sorry about this again, it's going to take a while for my USOILSPOT chart to load up like it always do. So let's give some couple of seconds, I think, to see if it will load up sooner than later. So while we wait for it to load up, I see your comments. 649, happy new month to you. Joe Creamer 1, good morning. Roro Zoom, Red Cat 74, and Millionati, good morning to you guys, and glad to have you around with us this morning. So my USOILSPOT is taking quite a while for it to load, so I will just have to open up another chart and let's see how fast this will load up. Okay, so finally it has loaded up. All right, great. So the first asset we are taking on this morning is going to be the USOILSPOT, and in fact, personally, I just had a buy position triggered recently, but I will be going into the details on that one very soon. But for the sake of those who are joining us for the first time and for educational purposes, let's quickly run through how the week started for us in this community and what led to the situations we had since this week began. Well, the first thing we did here on the 1 hour time frame at the beginning of the week, let me zoom in so we can see things clearly. Initially, it was more of a consolidation phase where we saw price action confined within the $78.50 level and our key level for the week at the $78 area. And of course, you know how we use our ranges in this community, especially when we identify one on the chart. We exercise patience and wait for either price to break out of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And of course, the latter was what happened, as we saw price breakdown and in fact came back to retest that $78 area to trigger our first sell position for the week. And since then, we have been selling this asset. I think for the first couple of days, we added more positions. Remember, we marked out multiple levels like the $77.40 area and of course the $76 $73 area to maximize the potential of that bearish move. So for the first 2 days of the week, it was more of a profitable start for us all, and for those of us who capitalized on that opportunity, well done and kudos to you for being on standby to capitalize on that move. Now, during our Tuesday session, we begin to notice the emergence of buy pressure, and most importantly, we did acknowledge the fact that price action has been, sellers have been finding it difficult to break through that area around the $76.73 area. Now, with that in mind, and we said we will be only looking out for buying opportunity if price action climbs back above this ascending trend line, and then we marked out a level at the $77.50 area to capitalize on any uptrend move, though price did break out of that structure. But unfortunately for buyers, the traction didn't gain significant momentum, as we saw a barrier for buyers again around the $78 area, pushing price further to the downside. And during our live session yesterday, we did acknowledge that we are at a crucial juncture where price action has just broken down of that ascending trend line we marked out at the beginning of the week. And you know how we use our ascending trend lines in this community. As long as price breaks down on our ascending trend line, it makes quite a lot of sense for us to start looking out for selling opportunities. And if you are part of our live session yesterday, we saw price break down this ascending trend line, and I did mention that for those of us who missed out on this breakdown, that we should exercise patience and see if the market will come back to retest the ascending trend line. And if it does, we want to be joining a decline to the downside. And in fact, we saw how price came back, retested the trend line, and of course the $77.15 area, which happens to be the entry point we projected yesterday. Then we also said we will be adding more position if price goes ahead to break down the $76.73 area, which of course it did. So we had a sell position, 2 sell position minimum from yesterday till today, giving us roughly the first position ran into about 175 pips, while the second position ran into about 130 pips before the buy pressure came in. And you know how we do it in this community. When price action moves significantly well in our favor, it's our duty to ensure we move all our stop losses and secure the current position. And if you had done that, you must have been taken out of that sell position with a reasonable amount of profit. And for those who did, well done and kudos to you for capitalizing and managing that position judiciously well. So with that being said here, how do we intend to run our trades today, especially being the first trading day of the week, and of course considering the ongoing OPEC Plus meeting happening at the moment? Now, for those who still have a sell position running at this point, it is prudent to take action now and secure the current sell position by adjusting your stop losses, or probably close this position as we begin to notice sellers encounter some resistance around the $75.80 level and the $75.40 area. As you will see here, every attempt by the sellers to break through the structure in the last 15 to 18 hours has been abortive, as you saw buyers continue to negate all the attempts to break through that area. So if you still have a sell position, please move your stop losses accordingly. Now, the recent downward pressure can be attributed to the disappointing Chinese manufacturing PMI data, with China's NBS manufacturing PMI registering 49.2 in the month of January, which was below the prior figure of 49.0, and of course the market consensus of 49.2, indicating a 4th consecutive month of contraction in their manufacturing activity. Adding to this bearish sentiment, a surprise build up in the US weekly crude inventory exerted downward pressure on the US oil prices. Now, yesterday, the Energy Information Administration reported a 1.2 million barrels increase for the previous week, in contrast to the previous week's decline of 9.23 million barrels and contrary to market expectations for a 217,000 barrel draw. Now, what this means whenever we have an increase in crude oil stockpiles, it shows that there is not enough demand to bring the to drop the stockpile. So this simply means that there is quite a lot of supply than demand, and when there is a high supply, definitely price will drop, and we can see the reason why price has been dropping since the beginning of the week. Now, looking ahead, today's focus turns to the January Chinese Caixin manufacturing PMI along with the US weekly initial jobless claim and ISM manufacturing PMI. This event have the potential of significantly impact oil prices. In response, we are going to strategically position ourselves for the next market move using the structures we've identified on this chart. Now, I have a very simple setup here on the 1 hour time frame, which I am very excited to share with you. But for the sake of clarity and having an holistic perspective into this market, let's run through the higher time frame to see what has been going on around that area. Now, if we look at the 4 hours time frame, I want to call our attention to the 4 hours time frame. And right here on the 4 hours time frame, what I did was to take into consideration the nature of price action since the beginning of this year, and it's quite obvious that price action has been bullish, and in fact we have a couple of ascending trend lines here which buttresses the strength of the buyers in this market. But we have a major one right here, which is the thick one you're seeing on your screen, which was finally broken during the course of this week to the downside. But one interesting thing you would notice is that as soon as price got into that $76 area, we have been noticing buy pressure resume from that area. Remember, this level was a strong selling niche during the last week of the month of December of last year, as you will see here, before we finally saw the breakout during the previous week. As you will see, we saw the breakout here, and since the breakout happened, the $76 level had continued to be a strong barrier for sellers, as every attempt by sellers to break through has always been met with strong resistance from buyers, as you will see here. So buyers kept on pushing price to the upside, and right now in the last 24 hours we saw price back into the $76 area, and in fact the last 24 hours has been characterized with a lot of consolidation phase around that area. Now, with this information here, you will agree with me that we are at a crucial juncture in this market where price is currently trading along the $76 area, which interestingly shares a confluence with this ascending trend line that we have right here. Now, I would like to project this ascending trend line into our 1 hour time frame, as it is going to be playing a major role in guiding our trading decisions going forward. Now, as at this juncture we are here, and considering the continued buy pressure along this area, I'm of the opinion that as long as price remains above the $76 area, we will continue to look out for buying opportunities to the upside. However, if the price drops below the 76 and continued selling pressure persists below the 76 level, then a breakdown retest of both the ascending trend line and the $76 area could incite a sell-off to the downside. So we are at a very crucial juncture. Hence, it is very important we exercise patience and look for significant confirmation before jumping into any positions. Now, with this in mind, I was able to identify a simple trading setup on the 1 hour time frame. Now, scaling back down into the 1 hour time frame, and this morning while I was trying to decipher what price action is likely going to do for today, this was what I was able to come up with. The first thing here is the fact that the last 18 hours has been more of a buying niche around the $75.80 level and the $75.40, giving me a temporary demand zone to work with for today. And the inability of sellers to break through this zone for me is a good sign that we may likely see a counter trend opportunity to capitalize on. And in fact, if you look at what happened here in the last 3 hours, despite this strong move to the downside, we can see price coming back to close above this area in form of an hammer candle, which technically reveals the presence of buyers within this area. Now, in addition to this, if you look at this closely, you will begin to see that price action is gradually transitioning into a reversal pattern in the form of a double bottom structure. Now look at this. Price drops into this area, came back into the structure, and the inability of sellers to break down and close below the previous low for me is a good sign that we are likely going to be seeing a reversal pattern in the form of a double bottom structure. And usually when we identify such patterns like this, the next thing we do is mark out the neckline, where we shall be waiting for price to break out of the neckline so that it will validate the potency of that reversal pattern. So we have a neckline around the $76.35 level, which interestingly sits just right above that ascending trend line I shared with you on the 4 hours time frame earlier, giving us a sign that price is back within a buyer's territory. So a break above of this neckline for me is a good signal for us to buy this asset. So I have a position right above that level, looking out for buying opportunities from that area. And if price continues to climb, we have multiple levels we will be using to maximize the potential of the bullish move. We have the $77.15 area. We also have the $78 area, and of course we have the final one, which happens to be the highest point price action has been for this week at the $78.50 level, an area we shall be looking out for more opportunities to buy. Now there is a caveat to this buy setup here, which I also want us to take into consideration while we continue to monitor price action. Now that is this ascending trend line that we have here, which was broken yesterday, and you all know that from a technical standpoint, when price action breaks down a key trend line like this, we expect price to come back to that trend line at some point to incite a sell-off to the downside. So with this understanding, we want to ensure that as soon as the buy positions get into that area around the trend line, we want to move all our stop losses to secure the current position while we exercise patience and wait to see how the market is going to be reacting to that trend line. Now, if the price gets into that area and we begin to see that buyers are losing momentum, probably resulting into a reversal pattern like a double top structure, then we want to be selling the breakdown of the neckline. However, if price action breaks out of the trend line to the upside, then this will definitely give us more confidence to be adding more buy positions above the $78 area, and then of course the $78.50 level. So this is how we shall be managing our buy position on this particular asset. So please keep this in mind as we continue to monitor price action. Now, should price not continue to the upside and then we see price drop up to the downside, well, the only condition that will make me want to be selling from this particular juncture, that is, you will see that since yesterday price has been ranging within this area, the only condition that will make me sell is for price to drop below the lowest point for this week, which is exactly around the $75.40 level. Now, a breakdown retest of this level will definitely give us more confidence to join the decline to the downside. So I encourage us all to mark out those levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions. So this is my simple view on the US All Spot for today. If you have any questions whatsoever, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever before we move on to the next asset on our watch list. You can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. All right. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, let's move on to the next asset on our watch list. So the next asset on our watch list for today is the USTech 100, popularly known as the Nasdaq, and the Nasdaq here is considered to be one of the most profitable assets on our watch list since the beginning of this week. We've had situations where we bought this asset and price did move very well, and we also had situations during the course of the later part of the week where we also sold and price also moved significantly well. Now let's quickly run through how the week began on the USTech 100 and what led to the order, giving us opportunities to either buy or sell. Now, at the beginning of the week, price was sitting above our key level, which we did identify on the higher time frame, exactly around the $17,350 level, as you will see here. And of course, when price remains above our key level, we want to be looking out for patterns and structures that supports the idea of buying that asset, except if something significant comes up on the chart. And considering the fact that price action was sitting above our key level at the beginning of the week, following a sharp rejection of that key level around this area, we were able to identify a range as price was confined within the 17,445 level and the 17,350 area at the beginning of the week to give us a structure to work with. And usually whenever we have a range like this, we exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. And in fact, at no point in time did we see price come even close to the support line, but instead price was more trading above the resistance line of that range, and of course the breakout retest of that structure was all we need to trigger our first buy position for the week. And for the first couple of weeks we kept on buying these assets, as you will see. Then we added more positions at the breakout of the 17,515, and of course added one more at the breakout of the 17,600, which of course did not do well. The third position here did not do well at all, but the first two positions did very well and we moved our stop losses and we got taken out of that position with a reasonable amount of profit after selling pressure resumed in this market. Now, on Tuesday's trading session, we talked about the potential of sellers coming in, and in fact, to guide our trading decisions for Tuesday's trading session, we marked out this ascending trend line, which we said we will be using to guide our trading decisions. Now, if price remains above the ascending trend line, we continue to look out for patterns and structures that support the idea of buying, but a breakdown of the ascending trend line will welcome selling opportunities. And with that in mind, we had this level here at the 17,515, which shares a confluence with that ascending trend line. So we said we will be selling if price breaks down that structure, and of course it did. We had our first sell position triggered there. In fact, this move was phenomenal as we saw the second one break down the 17,445, adding more positions right there. Then we had a third one here. We talked about this yesterday. That breakdown of the 17,350 will welcome more selling positions, and of course a further breakdown of this one at the 17,240 will welcome more selling opportunities, though we got taken out at some point in time yesterday due to the outcome of the FOMC meeting. But I do hope you also join back again when price continue to move to the downside. If you had done so, you must have been taken out with a reasonable, or let me say considerable amount of profit on this one before the bullish momentum came in at this point. So once again, congratulations to everyone who did capitalize on all of these trading opportunities. So with that being said here, and at this point, all sell positions have been closed as we begin to notice some new buy pressure resume in this market. So what are our chances today to either buy or sell these assets? To answer that, we want to take a quick look at the higher time frame. Excuse me, please. All right, sorry for the break. Excuse me, please. So on the daily time frame, we had a simple technical structure here, which we said we will use to guide our trading decisions for this week. Now, what we did on the daily time frame was to consider how price action has been behaving in the last 4 to 5 months. And of course, it's obvious that price was on a bullish momentum. And in fact, to emphasize the strength of the buyers here, we have this ascending trend line marked out on the chart. And of course, when price remains above the ascending trend line, we want to be looking out for patterns and structures that supports the idea of buying the asset. However, in addition to this trend line, we had a couple of levels which we said we will be using to guide our decision. We saw how price broke out of that psychological level a couple of weeks ago around the $17,000 area, just right here, a level which was at some point a barrier for buyers but was successfully broken out a couple of weeks ago. And technically, when price breaks out of a key structure such as this psychological level, we expect that price may come back to that level at some point, which interestingly is closer to that ascending trend line to incite another wave of bullish momentum. So at the beginning of this week, we had this idea of using the $17,350 area as a yardstick to guide our trading decisions for the week. And what we said here was that if buy pressure persists above the structure, we look out for buying opportunity and of course maximize that momentum if price breaks out of the highest point at the 17,680. Remember, we capitalized on some buy positions there, but yes, on Tuesday stroke Wednesday, we saw bearish opportunities breaking down that 17,350. Now the question is, how far will this bearish momentum go? As at yesterday's session, we talked about this. We were looking forward to see how far it will go. Will it go into the 17,000 area or this ascending trend line before another wave of bullish momentum will happen? And if it's going to go as far as that, in what manner or pattern will it go into the 17,000 area? So we were considering some couple of factors here. We were thinking of probably price will still come back, retest the structure before jumping into that direction back into the 17,000 or this ascending trend line. But if we now scale down into the 4 hours time frame, we begin to see in what manner price action wants to take. Now zooming into the structure, you will see this is the 17,350 as you will see here, and we've seen a couple of retests of that structure. Now will price action continue to the downside, maybe into that trend line? Well, the way things are going right now, you will see that buyers are beginning to gain some momentum around that area. Now this begs for some attention now. So we have one level here at the 17,185, which happens to be the lowest point price action has been for this week. So we did need to mark out that level, as we are going to be needing it to guide any bearish momentum if it so happens that price action breaks down that level. So we are going to be using this on our lower time frame too as well. So let's project it there. So if price action goes ahead to break down the 17,185, we are likely going to see price move into this ascending trend line, maybe in anticipation of another wave of bullish momentum, and that will be dovetailing to a minimum of 300 pips to catch if that happens. But if that does not happen, well, and buy pressure persists above the structure, we could see price break back above the key level at the 17,350 to incite another wave of bullish momentum. Remember, this zone here still has a memory for buying power, as you will see what happened here a couple of weeks ago. Now, with this understanding in mind, you would agree with me that we are at a very crucial juncture where we need some significant signal for us to make any informed trading decisions. Now, scaling down into the 1 hour time frame, we begin to see things more clearly. Now, this is the 17,185, so I think I will just have to readjust this to capture the lowest point, which is more visible here on the 1 hour time frame. So we have the 17,120. I think that is most appropriate. Okay, so we have the 17,120, which for me, I will be looking out for selling opportunities below that particular structure. Now, as it is right now, we have been noticing some buy pressure here. We saw the first touch of this level, and what happened next? Sellers found it difficult to find a new low as we see a higher low here, giving us signs that buyers are gradually gaining momentum behind the scenes. And if this persists, we are likely going to be looking out for buying opportunities today. Now, to further help us position ourselves for the next move, I want to connect these levels together. Look at these levels right here. So in the last 24 hours, we've seen some series of lower highs, giving us a beautiful descending trend line to work with. Now, to buy the USTech 100, I'm looking at 17,235 as a potential entry point, which shows that price is currently trading around that area. Hold on a second. So we have it right here, and then we look out for more opportunities at the breakout of the key level. Now, why have I said so? Now, if you look at the structure closely, you will see how the descending trend line and the 17,235 level shares a beautiful confluence. Now, price breaking out of that descending trend line is a sign that the trend line may no longer have the capacity to continue to negate the bullish attempt, and in fact, coupled with a series of higher lows here, gives us a sign that anything above the 17,225 level makes a lot of sense for us to look out for buying opportunities. And let's give enough breathing space for price action to move around right below the previous low, dovetailing to about 80 pips approximately, and let's see how far this momentum will go. However, if this bullish opportunity fails and instead price drops to the downside, well, the only condition that will make us sell the USTech 100 today is for price to take out the lowest point for this week at the 17,120, probably retest the structure to give us more confidence to be part of a bearish move. In fact, if price breaks below the 17,120, we are below the descending trend line, which will be considered to be the seller's territory. So this is how we are going to be managing our trades today, as our center of focus for today's trading session is between the 17,235 and the 17,120 area. So depending on the direction of the breakout, that will give us an idea into where price action is likely going for today. So mark out these levels and let's see how the market will play out going forward. If you have any questions, feel free to drop them in the comment section. Because of my time constraints, I will be taking some time off, so I will be checking the comment section from time to time to see if there are any questions for me. So with that being said, we will be moving on to the next asset on our watch list for today, which happens to be the USDJPY. Now, on the USDJPY, we've had some interesting situations going on since the beginning of the week. Remember, we have spent more of this week selling the USDJPY as price action has been trading below that descending trend line we marked out a couple of days ago, which of course has been guiding our trading decisions since the new week began. Now let's run through what started the week, what's idea came in for us at the beginning of the week that led us to start selling this asset. Now, during the first 8 hours of the week, price was more or less trading within the 148.340 and the 148.00 area, giving us an indecisive phase at that point. And of course, you know how we use our ranges. Whenever we identify them, we wait for either a breakout or breakdown of the range to give us an opportunity to either sell or buy. Now, we saw what happened here at the beginning of the week. Price broke down the 148.00 area, triggering our first sell position for the week. And of course, if you missed out on that one, price did come back, retest the structure, and since that moment we sold right into the 147.200, scooping about, let's see, 80 pips on the first sell position. We had about 50 pips on the second sell position, dovetailing to about 120 pips before the buy pressure resumed, taking us out of that position with a reasonable amount of profit. Now, if you remember what we said here on Tuesday's trading session, we said that the descending trend line will continue to guide our trading decisions going forward. That if price remains below the trend line, we'll continue to look out for patterns and structures that support the idea of selling. But if price breaks out of the trend line, then we want to start considering buying this asset. And of course, we saw what happened on Wednesday Asian session. Price broke out, retest, and then we said that if that happens, a break above of the 147.500 will welcome buying opportunities. So we bought the 147.500, added more position at the 147.700, though the traction didn't last long before we were taken out of that position. The second position must have been taken out maybe at stop loss, and then the first position had break even, depending on how you moved your stop losses when the market moved in our favor. Now, during our live session yesterday, I did mention here, if you were with us yesterday, that the only condition that will make us want to sell this asset is for price to drop below the 147.200, and as a result of this, we had a sell stop order below the structure. And look at what happened prior to the FOMC yesterday. Price significantly broke down the structure, moving about 100 pips thereabout in our favor. And if you indeed moved your stop losses accordingly, you must have been taken out with a reasonable amount of profit, and kudos to you for managing this position appropriately. Now, as it is right now, we are at a very crucial juncture where the last 12 hours has seen price action oscillating just around that trend line, to further emphasize how important this juncture is, as we are not sure if price will break out of this trend line to emphasize the strength of the buyers, or will price action continue to respect the trend line to emphasize the strength of the sellers in this market. However, to have a better perspective into what is going on in this market, it's important for us to have a quick have an understanding of what's going on behind the scenes. Now, like I said earlier, all sell positions have been closed on these assets, as price action has been confined within a range. Let me say we have a consolidation phase, though it's not a lateral one, but it's more like a triangular consolidation phase where we are waiting for an explosion to happen, maybe to the downside for selling opportunities, or to the upside for buying opportunities. So we need to be very, very careful. And in fact, this range bound trading activity is influenced by a confluence of factors, one of which is the soft domestic data weighing on the Japanese yen, coupled with a moderate uptick in the demand for the US dollar of late. Now, the positive sentiment surrounding the US equity futures market acts as a significant headwind for the Japanese yen amidst a bullish run for the US dollar, which of course is backed by the Federal Reserve's less dovish outlook expressed yesterday. Now, despite these influences, there are lingering factors offering hope for the Japanese yen too. The recent escalations of conflicts in the Middle East, with the potential for a wider war, and China's economic challenges still contribute to a supportive backdrop for the Japanese yen. Furthermore, the Bank of Japan's hawkish stance last week adds an extra layer of support for this currency. Now, as we navigate this market, attention turns to the US ISM manufacturing PMI coming up later today for potential short-term trading opportunities. So, in anticipation of this event, we can see how the market is gradually getting ready for whatever the event will come up with, giving us a consolidation phase, which I highlighted earlier, has a triangular consolidation phase waiting for an explosion to happen to incite a trading opportunity. So as it is right now, we need to be very, very careful. This descending trend line here is still going to be playing a major role for us. So price breaking out of the descending trend line will be a good sign for us to look out for buying opportunity. So with this understanding, I have a buy stop order sitting anywhere above the 147.200 to capitalize on this uptrend move. However, if before the breakout of the 147.200 happens, we see price action does something like this, break out of the descending trend line and comes back to retest it with the emergence of buy pressure on this area, we could join a buy opportunity early enough before the breakout of the 147.200 happens. Now, if price continues to climb, we have multiple levels here. We have the 147.500. Please, as I'm mentioning, you want to be marking out these levels as you will need them to guide your trading decisions going forward. We have the 148.00 area, and of course the highest point here at the 148.340, all of which will be welcoming more buy positions if price action ever breaks out of this structure. So kindly mark out these levels on your chart as you will be needing them as a reference point to guide your independent trading decisions today. Now, to cap this whole idea of bullish opportunity, I have an ascending trend line marked out here. So let me realign this trend line after connecting the series of higher lows, so we have something like this to work with for today. So this ascending trend line will continue to guide this bullish idea, and as long as price remains above this ascending trend line, we shall continue to look out for patterns and structures that supports the idea of buying this particular asset. So let's see how this will play out today. However, in as much as we are looking out for buying opportunity, remember how we do in this community. We try to keep our options as open as possible. So if sellers come in this market, how do we intend to run a selling opportunity here? Well, for me, if you would ask me, I would need price to take out the lowest point here at the 146.150 before considering selling this particular asset today. So I want to see price drop below that area, retest it, giving us a good confirmation before jumping into any bearish momentum today at all. However, if price gives us some significant setup before the breakdown happens, that is a breakdown of this ascending trend line, and we can identify some series of lower lows and lower highs on our lower time frame, then we could position ourselves for a sell position even before the breakdown of the 146.150 happens here. So this is my simple view on the USDJPY for today. Let's see how the market will play out. You would agree with me that we're at a crucial juncture. So let's exercise patience and let's see how the market will anticipate the major event today and of course react to the data today. So mark out these levels. Let's see how the market will play out going forward. If you have any questions, feel free to let me know in the comment section. I see you, Isaiah Ho 168. I see you, Yaego and Bonbino 4206. Good morning to you guys, and glad to have you around with us this morning. So while I still look forward to any questions you have, I will be going right into the last asset due to the time constraint. And of course, the final asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. And on the gold spot, we have been maintaining a strong bullish bias since the beginning of this week, though we had a moment where we sold, but the momentum did not last long as we were taking out in a stop loss on that one. So let's quickly talk about what really happened and what guide our decisions today for this week before we run through how we planned for today. So the week started with a consolidation phase. We saw price confined within the $2,028.50 level and the $2,019.20 area to reveal the prevailing uncertainty in the market at the beginning of the week. Then something interesting happened while price was still consolidating within that range. And remember this descending trend line we marked out on the higher time frame, which of course has been supporting the bearish momentum since the beginning of this year 2024. Now let me quickly show you what things are looking like on the higher time frame so you can have a better understanding into what I am talking about here. Now remember, at the beginning of the week right here on the 4 hours time frame, we did emphasize how since the new year began, market participants appear to have been going through some profit-taking activities, resulting in this descending trend line we marked out here. So at the beginning of this week, we saw how price broke out of that descending trend line for the first time this year, just right around this level right here. So I'm back within the 1 hour time frame, as you will see. Now the breakout of the descending trend line was a positive signal for us that buyers may likely be taking over this market. And one of the things we said here on Monday was that we will look out for a retest of that structure to give us an opportunity to join that uptrend move. Now, to guide our price entry level for that retest of structure, we marked out a price area around a 2024 level where we said we will be jumping into a buy position from there. Now we saw price come back, we saw buy pressure resume around that area, giving us the privilege of jumping into that buy position. And since that moment, we have been buying this asset throughout the course of the week, maximizing the potential of the move by adding more buy positions at the breakout of levels such as the $2028.50 level, and of course the $2035 area before that bearish momentum came in on Tuesday, taking us out of that buy position. So it was quite a good start for us for this week on the XAUUSD. However, okay, sorry about this, let me go back to the 1 hour time frame. So however, after this strong impulsive bearish leg happened, we were thinking that price may drop to the downside yesterday, and as a result of that, we had this 2035 level duly marked out, looking out for selling opportunities. Though the position got triggered, but it didn't do well at all, as we saw price take us out of that buy position, that sell position in a loss. And one thing I mentioned here yesterday is that this ascending trend line is going to be playing a major role in guiding our trading decisions for this week, and that as long as price remains above this trend line, we'll continue to look out for patterns and structures that support the idea of buying that asset. Now, to position ourselves for the buying opportunity for yesterday, we had a buy stop order sitting above the 2040, and in fact we saw price trigger that position, and then we added one more at the breakout of the $2047 area. So we had a price move about 130 pips for the first one, and about a 80 pips move on the second one, roughly about 200 pips. But I trust you guys must have moved your stop losses, because I usually emphasize this, that whenever price action moves significantly well in our favor, kindly move your stop losses accordingly. And if you had done that, you must have been taken out with a reasonable amount of profit on that one. And as it is right now, we've seen price drop and finally broken down that ascending trend line to welcome the idea of selling this particular asset. And from the fundamental perspective here, it's quite it's quite a fact that the US dollar remains very robust, approaching its highest level since December. If you look at the US dollar index, supported by the Federal Reserve's less dovish stance on interest rates yesterday. Now, this factor looms as a potential cap on the current uptrend of the XAUUSD, which is quite understandable. Additionally, a positive sentiment in the US equity market has to the end wind for the gold's upward movement, which we're finally seeing right now as price action just broke down that ascending trend line. So as market participants closely monitor the geopolitical tensions in the Middle East, particularly the risk of further escalations, sorry, excuse me, concerns about a slowdown in the economic growth in China contribute to supporting the safe haven appeal for the gold. But for me, I still think that the US dollar is too strong at this juncture, hence we want to consider the descent of the gold assets today, while we also look forward to the US ISA manufacturing PMI, which will be released later today, offering potential market moving catalyst. Now, with the situation we have here this morning, this was what I was able to come up with this morning. I did identify this range between the 2040 and the 2035 area, where I want to see price break out or break down this range to give me an opportunity to trade. Now, with the situation here, price just broke down the 2035, a level which has been a strong buying niche in the last 3 days in this market, as you will see here. Now that price has broken down the structure, well, for me, I had a sell stop order below the 2035, which has already been triggered and currently running with about 45 pips. For those of you who had your sell stop in place there, well, let's move our stop loss and secure this position, as there are chances that price could still retrace back into either the structure at the 2035 or the 2040, or even come close to the ascending trend line before it now continues to downtrend move. So move your stop loss, secure the position, and let's see if we are going to be seeing a retracement back into the structure. Now, the question you want to be asking is, how do we know when to join the sell move? Very good question if you ask that. Well, what we are going to be looking out for is if price comes back into either of this area here, what we will look out for is continued selling pressure, possibly evolving into a reversal setup, let's say a double top structure or a head and shoulder pattern. Then if we can identify a reversal pattern, maybe on our lower time frame, we just mark out the neckline of that reversal pattern and then sell the breakdown retest of the neckline and join the momentum to the downside. So that is how we will know if we are going to be selling this asset. So let's see how the market will react to this zone. Will it come back and retest? If it does, we want to be joining that bearish move, that retracement move to the downside. Now, bullish expectations in this market, well, I'm doubting if because we saw some series of lower highs in the last 48 hours now. We saw a high here, and then we saw how buyers have found it difficult to break out of the previous high here, giving us a lower high. So if we connect the series of lower highs here, we have a new descending trend line to guide trading activities for today. So as long as price remains below this descending trend line, we feel comfortable in our bearish bias. However, let me thicken this a little bit to emphasize its importance, and let me give it a red color. Okay, so let's do some little adjustment to capture most of the pivots. All right, so this descending trend line is going to play a major role for today. So as long as price remains below the descending trend line, we feel comfortable in our sell position. However, if the descending trend line is broken or breached anytime today, let's wait for a retest of structure for confirmation to join an uptrend continuation, where we shall be using the 2047 and the 2052 area to guide any bullish idea from this particular juncture. So that is what we shall consider before buying this asset today. But as it is right now, we maintain a bearish bias. Mark out these levels, these trend lines, as you will be needing them to guide your independent trading decisions for today. So this is my simple view on the XAUUSD. Do you have any questions or you need some further clarifications? Let me know in the comment section. I will take the next 5 seconds, 5-10 seconds will do, and then we come to round off on today's Extreme Speed Live technical analysis session. All right. So, in the absence of no questions, I think we have come to the end of today's technical analysis session. It has been a great moment with you guys. And through the course of the session, we were able to take on 4 of the major assets on our watch list, including the US All Sports, the USTech100, the USDJPY, and finally the XAUUSD, where we were able to identify simple trading setups to guide our trading decisions for today. And so far this week, we've done pretty well as price action has moved significantly well on some certain assets, except for the last 24 hours where we saw some choppy situations due to the anticipation of the FOMC. Yesterday. But as it is right now, I'm of the opinion that we will likely gain some traction today. So we want to be on standby to capitalize on those opportunities. So I do hope you marked out those levels as we illustrated during the course of the session. If you had done so, kudos to you, well done. So what you just need to do right now is to exercise patience and allow the structures to mature before jumping into any positions. And remember that every decisions we make in the financial market is more or less an educated guess. And with this understanding, you do want to have a well-defined risk management strategy in place to mitigate against any sudden pullback that may happen against our direction. So on this note, I want to wish us all the best of luck. And for those of you who joined us for the first time today, I hope you gained a couple of things here today. If you did, you want to be part of our subsequent editions. Trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works and eventually be able to use the information you gather in this community to make your own independent trading decisions. So I look forward to seeing more of you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, depending on your time zone, as we continue to monitor price action. And of course, we shall be here again tomorrow to review how well these assets have been doing as we prepare for the end of the week. And of course, market participants will definitely be rounding off trading activities ahead of the weekend. And tomorrow too as well, we look forward to the NFP data tomorrow too. So it's going to be an interesting one tomorrow. So you do not want to miss out on our sessions for tomorrow. So on this note, I wish us all the best of luck. Enjoy yourself and be patient, and let's wait for our structures to mature. Trade smart, trade consciously, guys, and do have a wonderful evening, everyone. Bye bye.